Namaste, my dear friends. Now referring to you, value of supply under the GST. We have broadly two categories. One, valuation as per section 15, subsection 1 to subsection 3. On the other hand, second group is the valuation based on valuation rules, right from rule number 27 to rule number 31, and followed by furthermore rules we have. Now I am referring to you the value of supply for supply of goods, supply of services or both. In the given case, my dear friends, if you refer here, I just present in front of you by saying that take the value of supply lifting from the books of accounts and add the following if not added. Section 15, subsection 2, clause A to clause E, followed by section 15, subsection 3 with regard to a discount which is allowed to reduction from the value of supply. So in the given scenario, when section 15 subsection 1 to section 15 subsection 3 valuation comes into picture. In the case where if the price has sole consideration and the seller and the recipient, the supplier and the recipient of the goods, services or both should not be related parties, then we can go with the normal valuation by inviting the attention by adding if not added the following points. Section 15 subsection 2 clause A says any taxes, duties, cess, fee or other charges should be added in the value of supply if the given supply is not already included. However, we should not add GST taxes, CGST, SGST, UTGST, IGST, GST compensation cess we should not add in the value of supply. As per section 15 subsection 2 clause A. How to understand this? With the help of example, now I am going to bring the notice is as follows, my dear sir. In the given case as follows. Bring in the notice here with one illustrative example by taking the simplified example. X Limited supplied product peer for rupees 2,36,000 which includes of IGST 18%, but exclusive of the following: 1. Custom duty 20,000 paid on import of peer, social welfare such on such import of duty 10% already paid, mandi fee or the tax which is rupees 1,000 has been paid for the given product. Find the transaction value of supply under section 15 of the CGST Act. Also calculate IGST. Now as per section 15 subsection 2 clause A, we should include all duties and taxes if not included. Am I right? What is not included? GST taxes. Here GST taxes is included in the given value of 2,36,000. We should eliminate the GST tax and add custom duty rupees 20,000 on 20,000 social welfare such as namely 10% of 20,000 rupees 2,000 should add. Mandi tax also a tax other than the GST tax, therefore 1,000 rupees should be added. What is deducting from 2,36,000? IGST amount. Deduct that, eliminate. Add custom duty, add social welfare surcharge, followed by the mandi tax, should add it and arrive the value. On that value, apply the GST which is 18%. So first value, transaction value is as follows: 2,36,000 inclusive of GST, eliminate it. We eliminated 36,000 we eliminated, and add custom duty, add social welfare cess, add mandi tax. We got transaction value 2,23,000. On that you apply 18% GST. In the given case 40,140 is the GST. So as per section 15 subsection 2 clause B, just now we understood, no? In the given case all taxes and duties should be added in the value of supply except GST taxes. Any doubt in the given case, my dear sir? First part, section 15, subsection 2, clause A. Any doubt I'm asking you? You have to respond, ma. You have to respond. No other option.
Clear, sir.
Very clear. Very good. Is clear? Very good. Here I would like to bring further more points. Under the Income Tax Act 1961, we have the concept called as tax collected at source, TCS. I am talking about income tax under section 206C of the Income Tax Act 1961. TCS tax is to be included in the value of supply under GST to find the GST, or should not include. No doubt, tax collected at source under section 206C of the Income Tax Act 1961, absolutely not the GST tax. Is it addable in the value of supply? In the given case, CBIC received clarification from CBDT, where Central Board of Direct Taxes very clearly said tax collected at source under the Income Tax Act is not a tax. It is a charge on estimated income of the person. That means a seller who sells the goods where the requirement of the TCS are applicable in Income Tax Act, he will charge in the invoice and collecting from the buyer and paying to the income tax department. Such cases, such a TCS is there in the invoice, the seller should not be add that TCS amount in the value of supply for the purposes of computation of GST. That means TCS is not a tax, is a charge under the Income Tax Act on the estimated income of the person. Resultantly, a seller who charges the TCS on sale of goods under Income Tax Act should not consider the TCS in the value of supply for computing the GST. How to understand this? With this illustrative example, now I am going to bring to notice is as follows. Simplified example is as follows, my dear friends. Bringing to notice as follows. A numeric example I would like to bring here. Look here. There's one example. Motor vehicle worth rupees 20 lakh is sold by Sundar Private Limited to a customer in retail market for rupees 5 lakhs. Has been paid in cash and balance amount by way of check. That means 20 lakhs of worth of the vehicle sold, 5 lakhs received in check, balance in cash. So total 20 lakhs is supply. Find the following. TCS under the section 206C of the Income Tax Act 1961 is applicable in the given case. B. Who is required to collect the TCS under the Income Tax Act? Value of TCS, if any. Value of taxable supply under section 15 of the CGST under valuation of GST. Invoice price of Sundar Private Limited. Assume applicable rate of TCS 1%, GST 28%. In the given case, my dear, what is the value of supply of motor vehicle? 20 lakhs. 20 lakhs subject to TCS under Income Tax Act is applicable because it is a precious product or the vehicle which is generally applied as per the Income Tax Act, which is 1% given in the problem, TCS of Income Tax Act. On 20 lakhs 1%, rupees 20,000, which is TCS. Now total value how much comes? 20 lakhs 20,000, which includes TCS. When you are going to be apply the GST on the value of supply, the value is it includes TCS or excludes TCS? You tell me now. Shall I charge the GST 28% on 20 lakhs or 20 lakhs 20,000, which is inclusive of TCS? Tell me quickly. Answer I want. TCS is not a tax set by CBDT.
20 lakhs only, sir.
20 lakhs only. Perfect. Excellent. So when you're going to apply the GST 28% on 20 lakhs, hardly it comes around 5,60,000. So total invoice price 20 lakhs plus TCS 20,000 plus GST 5,60,000. Total is how much comes? 25,80,000. So is the invoice price. The value of supply for the GST purpose 20 lakhs. TCS is not a tax set by the income tax, namely CBDT. Look here. Invoice price. Look here. Motor vehicle value 20 lakhs. TCS on 20 lakhs. Subtotal 20 lakh 20,000. GST 28% only on 20 lakhs. The TCS should not be added in the value of supply, which is not a tax set by CBDT. Got the clarity, my dear friends? Come back to regular study. Where we are? We are here. Value of supply, where if not added, add the following, namely all taxes and duties if not added except GST taxes. Thereafter, I am bringing to a notice a simplified one. Section 15 subsection 2 class B, which says supplies made by the recipient on behalf of the supplier. Supplies made by the recipient on behalf of supplier. Such a supply, if any, is not included in the value of supply in the hands of the supplier, you have to add now. How to understand? Very, very simple. Damn easy it is. I am going to bring to notice a simplified, a practical scenario of example is as follows for your kind consideration. Look here, one example. This is an excellent example for our understanding purpose. RAM Limited received an order to supply 1 lakh pens at the rate of 10 rupees per pen from KSA Academy. Before supply made by RAM Limited, KSA Academy supplied freely 1 lakh pen caps by buying from the market at 3 rupees per piece and made available to RAM Limited freely. Find the transaction value of supply made by RAM Limited under section 15 subsection 2 class B of the GST Act 2017. How to understand this? Very, very simple, this entire example, where RAM Limited is supplier of the goods, namely pens, 1 lakh pieces, agreed value to supply 10 rupees per piece. Buyer of the pens is KSA Academy. But KSA Academy purchased from the market pen cap worth rupees 3 per cap, 1 lakh caps purchase made freely available to supplier. In that case, the supplier supplied the total value of pens, what value it is. Simple. Look here, the same I am analyzing also furthermore. Look this, RAM Limited, this company RAM Limited, manufacturing the pens. From KSA Academy, 1 lakh pieces order received by RAM Limited to supply at the rate of 10 rupees per piece. In the meantime, what happened? My dear friends? KSA Academy purchased the pen caps and made available. Here, RAM made available only the pen without cap. So, cap not able to purchase or not able to produce by RAM Limited. On behalf of RAM Limited, KSA Academy purchased from the market the pen caps. See, how many caps purchased? 1 lakh pieces purchase pen cap at the rate of 3 rupees per cap. And the KSA Academy, that cap is made available to RAM Limited and given to RAM Limited freely. Hey RAM Limited, take the pen caps and please come to the manufacturer and send the goods to us. Then RAM Limited taken the 1 lakh pen caps and whatever they produce already the pen without cap and attaching the cap and supply the full amount of product. 1 lakh pieces supplied. Now, at what price they will supply? Not 10 rupees per piece, because 3 rupees cost is paid by the KSA Academy from their own source. Therefore, RAM Limited sells the goods at 7 rupees per piece. Now, from the department point of view, is 7 rupees the value of supply? Department says no, is undervalued. Therefore, add as per the section 15, subsection 2, class B, supplies made by the recipient freely to supplier. What value of supply made? 3 rupees per cap. How many caps? 1 lakh caps. Almost 3 lakh rupees. Now he made a supply for 7 lakhs. Add to that value of supply made by recipient to supplier. How much value? 3 lakhs worth. Should add back and another value. How much? 10 lakhs. On which Ram will be liable to pay GST. Not on 7 lakhs. Look here. Look here. Value of supply. Mute your mic, please. Only when you speak with me, you have to use the mic. Unmute and speak. All of you ensure that to unmute me. Mute, please. First to mute. All of you mute your mic, please. Whenever you want to speak, unmute and speak with me. Then immediately have to mute. Otherwise, it will be disturbed to the all other students also. Humming sound is coming here. Therefore, please try to understand. Okay. Now, please come back. Here, what is the value of supply for the RAM Limited? Sold value is for 7 rupees per cap, 1 lakh caps, 1 lakh pence, therefore 7 lakh rupees. Add supplies made by the recipient, on behalf of supplier, pen caps, 3 lakh caps, 1 lakh caps at the rate of 3 rupees per cap. Therefore, 3 lakh rupees should add back. And transaction value to pay the GST on what value? On 10 lakhs by Ram Limited. Is clear? Supplies made by the recipient on behalf of the supplier. If not added, you have to add back to the value of supply. Get the clarity? Any doubt in the given case? Section 15, subsection 2, class B it is. Is it clear? I'm asking.
Yes, sir.
Clear. Very good. Now please come back. Yes, good. Very good. Come back. So 15 to be understood. Supplies made by the recipient on behalf of the supplier should add in the value of supply if not added. Further, my dear sir. Section 15, subsection 2, class C. Commission and packing charges are incidental expenditure, if any, should add back. If not added. How to understand this? Also with simple example is as follows. Here I am going to bring to notice one simple example, 15 to C. Yes. Commission, brokerage, and if you refer here, carefully you understand this. Sir, in the given case, my client here is Mr. See here A Limited. Let us say A Limited is my client. A Limited is my client. Trader, registered person, Chennai. Sold the goods for rupees 8 lakh to ABC Limited, namely with instruction to pay 2 lakh rupees to X Private Limited. Why X Private Limited should be get 2 lakh rupees? Because X Private Limited is an agent of A Limited, procuring the orders and informing to A Limited to sell the goods. So A Limited appointed X Private Limited as his commission agent to get the orders. So X Private Limited is promoting or getting the orders from the buyers and informing to A Limited. Hey A Limited, one ABC Limited registered person is wanted your goods. Can you sell the goods? So A Limited directly sold the goods to ABC Limited. In that given case, A Limited agreed to pay commission to X Private Limited. Such a commission, A is instructed to ABC. Hey ABC Limited, look here. What you will do is, you please make the payment of commission to X Private Limited, let us say in the given case 2 lakh rupees, and balance 8 lakh rupees you pay to me. That means what? The worth of the goods 10 lakhs sold by A Limited to ABC Limited. But selling price A Limited shown in the invoice is 8 lakhs. With the instructions, hey ABC Limited, you please pay 2 lakh rupees on behalf of me to X Private Limited. So ABC Limited paid 2 lakh rupees to X Private Limited and 8 lakh rupees to A Limited. So A Limited says that my value of supply is only 8 lakhs. I want to pay GST on 8 lakhs. Allowed? No. Hey, A Limited, for you, the value of supply is not 8 lakhs. Add back as per section 15, subsection 2, clause C, commission. Therefore, in the hands of the A Limited, the value of supply is not the 8 lakhs, is the 10 lakhs. The value of supply is not the 8 lakhs, it is 10 lakhs. Got the clarity, my dear friends? Any difficulty in the given case? Any difficulty in the given case? Got the clarity?
Yes, sir.
So, value of supply for our client here is 10 lakhs, not the 8 lakhs. We add back commission, which is supposed to pay A Limited on behalf of A Limited, buyer of A Limited, given that to X Private Limited. Further, my dear friends, come back here. Section 15.2, C we understood. Thereafter, 15.2D, which talks about interest or late fee or penalty for delay payment. Here also some important point is there. Interest or late fee or penalty for delay payment. See, generally, I will bring this to you in a simplified numeric example that gives more clarity to make you understand this. Yes, I am bringing here for your information a simplified example. The commission, yes, I will bring here for information. Sir, in the given case, what happened? For example, assume a scenario like this. Here, Mrs. X Limited is a registered person, RP. RP means registered person. I used to say RP means registered person in GST. He is a seller of the goods. For example, he is a trader of what? Let us say laptops. That means taxable goods. He supplied, this person supplied the taxable goods. Let us say he supplied taxable goods worth rupees in the month of, let us say, October. In the month of October 2024, sold laptops for what value? Let us say for rupees 5 lakh. Date of invoice. Date of invoice. Let us say 1st October 2024. Goods sold laptops, goods namely laptops sold laptops for 5 lakhs on credit basis. On credit basis, and whose invoice date is as follows. Okay, and they said here, if buyer, let us say Mr. X, here Mr. X is the buyer. Assume a scenario like this, my dear friends. Therefore, you can able to have a clarity on this. Buyer is sold the goods, buyer received the goods from X Limited for rupees 5 lakhs. If buyer here in the given case, if buyer Mr. X not paid within 1 month, within let us say within, but best within 10 days, not paid within 10 days from the date of invoice, then rupees 2000, I will say here exclusive of GST, then rupees has to pay towards delay in payment charges. That's it. Is the way in which it is there. Simple, my dear sir. X Limited, registered person, seller, sold the goods to buyer X on 1st October 2024 for 5 lakhs. Laptop sold. If the buyer paid within 10 days, no delay payment charges. If the buyer not paid within 10 days from the date of invoice not paid, then the buyer has to pay rupees 2000 towards delay in payment charges. Now in that case, assume a scenario, this buyer paid the amount to them. When they paid, let us say here, let us say, my dear sir, here buyer paid. When they paid, assume a scenario, paid on 31st October. 31st October they paid. Paid on 31st October. That means what? Delay happened. Within 10 days from date of invoice not paid. 31st October they paid. In that case, what is the value of supply for our supplier? Value of supply for our supplier. Here, the value of supply is equal to supply value for what value? Already supplied for rupees 5 lakhs. They supplied for 5 lakhs plus delay payment charges. How much? Rupees 2000. 5 lakhs plus rupees 2000. Total value how much? 5 lakh 2000. So total value here is rupees 5 lakh 2000. Why I add directly to rupees means the problem very clearly said here, exclusive of GST. Nothing specified. We used to consider an inclusive basis, the rupees 2000 as a full and final payment. But in the given case, it is not specifically, it is specifically mentioned rupees 2000 exclusive of GST. In that case, they are charging GST extra. In that case, you take as such 5 lakh plus 2000, 5 lakh 2000, because interest, delay payment charges, which is time of supply at the time of received. When received? 31st of October. Supply the goods for 5 lakhs on 1st of October. So in the month of October, what is the value of supply? 5 lakhs plus 2000. Together 5 lakh 2000 is the value of supply. Is the way in which we can able to understood the given content of this particular section 15, subsection 2, class D, interest, late fee or penalty for delay payment. Is it clear, my dear friends? Any doubt in the given case? In the given case, time of supply for the given case is the date on which you received. How we received in the given example in the month of October itself. Therefore, in that case, for a supplier, time of supply October for delay payment charges. Therefore, 5 lakhs in the month of October we supplied in our given example. Add rupees 2000 delay payment charges, which is not added already. Therefore, now I am adding 15 to A, B, C and D. Up to this, any doubt? Tell me, interest or late fee or penalty for delay payment? Yes, any doubt? Tell me, ma, any doubt, my dear friends? In the given case,
No,
any
sir.
doubt? No doubt. Again, I'm telling you for information, since the given value of rupees 2000 is exclusive of GST, I taken as such and added in the value of supply. If it is nothing specified, we will consider the rupees 2000 inclusive basis. But here nothing, here very clearly specified, exclusive of GST. Therefore, we should not assume as an inclusive basis. Is it clear? Any difficulty?
No, sir.
Very good. Come
No,
back.
sir, clear.
Yes, very good, very good. So now please come back here. Further, section 15, subsection 2, class E, subsidy directly linked to the price other than government subsidy. Government subsidy should not be added in the value of supply to tax, not to tax. How to understand? Simple, very simple. I am bringing to a notice in a multiple manner this concept. Here. Now look here. A simple example. In the given case, my client is here Raj Rani Limited. Raj Rani Limited is registered person trader. Trading with what? Fertilizers. Fertilizers. Here, before they sell the fertilizers to the farmers, they have received some subsidy from the following manner. In the following manner. See, if you refer here, first one subsidy. Rupees 200 per bag subsidy is from Tamil Nadu government. Second case, rupees 300 per bag subsidy received from GHMC, local authority. GHMC na Greater Hyderabad Municipal Corporation, which is one of the local authority, like our GCC, Greater Chennai Corporation. So, is a subsidy from local authority. Thereafter, point number 3, if you refer here, we got here rupees 500 per bag subsidy received from NGO. And finally, the goods has been sold to farmer, to the buyer at rupees 2500 per bag. See, after receiving these subsidies, subsidy from Tamil Nadu government 200 per bag, subsidy from GHMC local authority 300 rupees per bag, subsidy rupees 500 rupees per bag from NGO, non-government organization. After receiving all these three subsidies, the Raj Rani Limited selling that fertilizer to the farmers at rupees 2500. Now, the law says, section 15, subsection 2, clause E says, add the value of supply the following subsidies other than the government. Government subsidy should not add. So, we take into account rupees 2500, which is, what is the 2500? Goods sold to buyer, namely to farmer. That is addable. To that, add to that what? Subsidy from NGO rupees 500 addable, because which is not a government. Thereafter, subsidy from local authority also we should add. Local authority is not government. What do you mean by government? Government means central government is department, state government is department. State government, whenever I say, which includes union territories. Central government is different, state government also different. But both we can call as a government. But we cannot call local authority as a government. Local authority means municipality, panchayat, corporation, greater corporation, like that. These are all different categories. So, subsidy from local authority, not subsidy from government. Therefore, addable rupees 300. Therefore, we got value of supply 3300. But here, subsidy from Tamil Nadu government is a subsidy from government directly linked to supply of goods, which is not addable. Rupees 200 in the given case should not add in the value of supply, is the meaning of it. which is section 15, subsection 2, class E. Easily understand. So, furthermore, presenting here, come back here, my dear friends. Section 15, subsection 2, clause E. Now we got it. Subsidy directly linked to price is addable in the value of supply except government subsidy. Government means central government is department. State government is department. Is it clear? Any difficulty, my dear friends? Tell me. You have to say correctly. Otherwise, tell me, I will explain again. Plenty of examples. Rafi sir will explain the provisions only with the examples. He is never going to read the provision as such. He will explain in a illustrative manner, simplified manner, practical manner. Section 15, subsection 2, clause E. Any doubt, my dear friends? I'm asking you, please. Clear?
Clear, sir.
If comes in the exam, you will answer correctly.
Yes, sir.
Okay, very good, very good. Now come to the point. Section 15, subsection 3, discount. Discount is deductible nature. Discount is a deductible nature from the value of supply. Discount is a deductible nature. How to understand this? When you talk about discount, my dear, I will bifurcate the discount part in the following categories. Discount is considered, I am going to bring to a notice like this. Discount is, I am going to consider primary, I mean to say the what we can call discount is two types, trade discount as well as cash discount. And one more discount is there, quantity discount, buy one get one discount. But anyhow, coming to this part, the part of the discount which I want to bring to a notice. Simplified manner. Discount allowed as a deduction if it is given before this supply or at the time of supply, or it is mentioned in the invoice going to be given in future if you satisfy the conditions. Here discount is given and the balance value for which we raise the invoice is what type of discount? A trade discount. In the second case, if the discount is given after supply but agreed upon before at the time of supply and can be specifically linked to the relevant invoices. So if it is mentioned in the invoice, such a discount also can be deducted from the value of supply. But neither given before supply nor mentioned in the invoice to be given in future, such a discount later on if given only to recover the amount in advance or for speedy recovery, that discount not allowed a deduction. How to understand this? Simple. I am going to bring the notice now here with the help of some more examples. One example. Look here. In the given case, Mrs. Vikram Limited, who is a basically registered person RP, dealing with what? Let us say taxable goods. Taxable goods. He supplied the goods. Assume a scenario. He supplied the goods. To whom he supplied? Let us say to a particular one of his buyer, known person. He supplied the goods. Here, goods sold on 1st November 2024 for rupees 10 lakhs. discount will be given, let us say 2% if buyer paid within 10 days from the date of supply. In the given case, what happened? In fact, buyer, let's say who's the buyer here? For example, I will say like this: Mr. Raj is a buyer who purchased this particular goods and he made the payment. He paid also. Let us say paid within 10 days. He paid within 10 days. From the date of purchase, he paid within 10 days. In that case, he will get a discount. How much? 2%. In that case, this particular discount very clearly mentioned in invoice. Invoice clearly shows the discount clearly indicated in the invoice. That I will say discount is clearly indicated in the invoice to be given. But sale taken place for 10 lakhs. Invoice raised for 10 lakhs. In the invoice mentioned, if you buyer paid within 10 days, we will give the discount of 2%. So in that case, what is the value of supply for our supplier? In the given case, here value of supply. Value of supply, how much means? It is not the 10 lakhs. 10 lakhs is the value. That is means, I will say here, invoice value is equal to 10 lakhs. Allowed a deduction less discount. Discount. How much discount here? Which is rupees 2000 because 2% only na it is. Therefore 2000. On 2 lakhs 2% is on 10 lakhs, sorry to say, on 10 lakhs 2% discount, how much comes? 20,000 comes na ma? 2% discount na 20,000. Correct, Raja? Tell me. 2% discount is correct. Recheck and tell me, okay? Then transaction value, the value subject to GST on what value means? On 9,80,000. Just I am just presenting in front of you like that without having calculator. You just check, recheck. If any doubts are there, please recheck and tell me. Is clear? Discount is allowed as a deduction if it is given before supply or at the time of supply mentioned in the invoice to be given in the future. That means invoice should be clearly indicated the given discount, then allowed as a deduction. Simple as that. But which discount not allowed as a deduction means I sold for 10 lakhs. After some time seller want money, therefore to expedite the realization he is offering discount which is not mentioned in the invoice to be given. In that case, discount is given at a later date after supply. That type of discount not allowed as a deduction. Got the clarity? Any difficulty? Here in the given process I have been explained to you section 15 subsection 2 class C commission I explained to you. What about packing charges? Packing charges, if you say, I will bifurcate the packing in the given case in the following categories. packing, primary packing, secondary packing, special packing, durable, returnable packing. Like that I can able to bifurcate for our easy understanding purpose. Section 15, subsection 2, class C, commission followed by comma, the packing charges and other incidental expenditure. In that case, packing, which packing should be added? Primary packing should be added, secondary packing should be added, special packing also should be added. Primary packing, the packing without which you cannot sell the goods. For example, I am selling the cough syrup. Cough syrup should be sold from in a particular bottle, 100 ml bottle, 100 ml cough syrup. Can able to sell to the buyer. Hey buyer, please come and hold your uh, hands like this. I will pour cough syrup and drink and go. They will say, like that, if possible to sell, not possible. So the primary packing, the bottle, and the bottle covering in a particular box is a secondary packing. Such a box covering with the polythene paper, special packing. So these and all are consume nature in the supply, therefore addable in the value of supply. But durable returnable packing should not be added, like container packing in a big container, cough syrup 1000 bottles stuffed and delivered to the buyer place. What is delivered? That particular cough syrup bottles, not the container itself. Container will come back to the seller, again he filling and supplying. Yes, durable returnable packing, that value should not be added in the value of taxable supply. Got the clarity, my dear friends? Any difficulty in the given case? Section 15, subsection 2, class A to class B. Class A to class B. Class A talks about taxes except GST taxes. 15(2)B, supplies made by the recipient on behalf of supplier. C, commission, packing, incentive charges. D, interest or the late fee payment. E, subsidy direct link to product or supply of the service, as the case may be, but not government subsidy. Government subsidy should not be added. Deduct, discount, which is given before supply or mentioned in invoice to be given after supply. Both are allowed as deduction. Then finally arriving the value. That value is called what? Our transaction value. This value is called what? Transaction value. That value subject to GST. This value subject to GST. And of course, the donation and all should not be considered as our consideration purpose. Donation and all is not a consideration because it is given without reciprocity, without any expecting return. So in that case, such donations are not form part of the value of supply. Given clarification by CBSE. At the same time, we do have further more points to discuss here and say that for some of the points I am bringing for a kind consideration. When we talk about TDS, tax deducted at source, under the Income Tax Act, I am talking about, not under the GST law. Such a TDS amount is to deduct by excluding GST amount. That means TDS under Income Tax Act should not compute inclusive of GST if the GST is shown separately in the invoice. Clarification given by CBSE. Further, simple to say, the TDS and GST mutually exclusive. One should not compute with the on the other. Example is as follows. CA Ram, a practicing chartered accountant, supply the tax audit services for rupees 2 lakhs plus GST 18% to Infra Limited. Find the TDS under the Income Tax Act. Applicable rate of the TDS under section 194J of Income Tax Act is 10%. Answer as follows. TDS should not be deducted by Infra Limited on the payment. The TDS should be deducted by Infra Limited on the payment to Mr. Ram. Payment made to Ram. What is the time limit in Income Tax Act to deduct the TDS? The book entry or payment entry, whichever is earlier. Of course. What is the value of supply? 2 lakhs. GST is 36,000. Totally 2 lakh 36,000. Is clear? When the TDS is going to deduct by the Infra Limited, should deduct only on rupees 2 lakhs, not on 2,36,000, because the TDS should not deduct an income tax act inclusive of GST if the GST is shown separately in the invoice set by CBDT already. Therefore, the net payment to the Mr. C.A. Ram is 2,16,000 after deducting the TDS of rupees 20,000, which is calculated on the value of supply exclusive of GST. Further, some more point which is valid to be considered. Some of the important changes are there, means amendments are there, which should be need to understand. A very good point here to be understand, my dear. Mechanism for providing evidence of compliances with section 15 subsection 3 clause B subclause 2 of the CGST Act. What is it? Is actually, if the discount is given after sale, which is very clearly mentioned in the invoice, supplier allowed as a deduction that particular discount amount, correct? Supply has been taken place, invoice issued. By mentioning in the invoice, we are going to give the discount in future if the buyer satisfies the conditions. Buyer satisfies the conditions. In that case, seller giving the discount. That means what? Deduction. For a seller, is a deduction. In that case, what happened? For a seller, deduction means he will get a particular debit note from the buyer. For a seller, it is a credit to avail the ITC. Such a value of ITC, what is availing on such particular supply, there is no mechanism to verify in the GST network portal even today. Sir, understandably not understand what you are telling, sir. Simple, my dear. See, I am a seller. I sold the goods in the month of October for 10 lakhs. I mentioned I will give the discount 10% if the buyer paid within 1 month. I sold the goods in the month of October for rupees 10 lakhs. In the invoice I mentioned discount 10% will be given post sale if the buyer paid within that time period. In the next month, November month, buyer paid the amount within 30 days, within 1 month. So buyer will entitled to claim discount of 10%. 10% on 10 lakhs, 1 lakh rupee discount. I already paid the GST in the month of October on 10 lakhs, 18% GST. I paid 1 lakh 80 GST paid. In the November month, I came to know that I am giving discount of rupees 1 lakh. On that 1 lakh not required to pay GST. On 1 lakh GST, 18%, namely 18,000 not required to pay, which I came to know in the month of November. Now, I am availing ITC. How am I availing ITC in the month of November on rupees 1 lakh 18,000? Because buyer issued debit note to the seller in the month of November for rupees 1 lakh. In that case, on 1 lakh, 18% GST, namely 18,000, were not required to pay GST by seller. So, he is availing ITC in the month of November. Seller availing ITC on such debit note received from buyer rupees 1 lakh on which GST 18,000, seller availed the ITC in the month of November. So far so good. But if like that availing ITC by the seller based on the debit note issued by the buyer, is it correctly availing the ITC? If you want to avail the ITC, Mr. Seller want to avail the ITC, buyer should reverse the ITC. This is what buyer issue the debit note. Debit note for the buyer is the liability for the buyer. Such a debit note received by the seller from the buyer is a credit note for the seller to avail the ITC. If the seller avails the ITC on such debit notes received from buyer, what is the guarantee the supplier, namely the buyer, reverse the credit by issuing the debit note? debit note issued by the buyer means buyer should reverse the credit. In the books, whether he reversed or not, there is no mechanism even today in the network portal. Therefore, the CBIC said, hey, Mr. Practicing Chartered Accountant or a practicing cost accountant, you please verify and certify whether that particular buyer who issued the debit note, whether he actually reversed the credit or not in his books. If the value exceeds rupees 5 lakhs in a financial year, a certificate should be obtained by the seller from the buyer stating that a practicing chartered accountant, cost accountant has been certified, stating that yes, the buyer, while issuing the debit note, he reversed the credit, which is more than 5 lakh rupees in a financial year. A certificate should be obtained from a practicing chartered accountant, cost accountant by the buyer, and such a certificate should be made available to the seller. Hey seller, I reverse the credit. See, my order has been certified, and you take the credit. So like that, a buyer should issue the debit note, and based on the debit note issued by the buyer, seller can avail the ITC and keep the certificate in his records. If the value exceeds 5 lakhs in a financial year, the amount of tax amount on debit note tax amount exceeds in a financial year 5 lakhs. If the amount not exceed tax amount in a financial year, not exceed 5 lakhs, then hey Mr. Buyer, you issue a debit note to your seller, reverse the creditor, reverser, you self-certify. In your letterhead, you certify and give that letterhead. In that letterhead, I certified that so and so amount of tax I reverse because of issuing the debit note, and that self-certification should be made available to the seller. Hey seller, you should receive the certificate and keep with you in your records. Tomorrow, whenever department going to come for verification or ask for clarification, you should be submitted to the department. Is the mechanism now has been brought into force. Of course, the CA and the CMA who require to certify the certification where the value of the tax amount exceeds 5 lakh rupees in a financial year, then the chartered accountant, cost accountant should certify it using the particular what we can call the digital signature. Certificate is important. Digital signature certificate is important. DIN, UDIN we called, namely called Unique Document Identification Number, which is available in the CA Institute website or the CMA Institute website for the chartered and cost account respectively. Now please come back. Now got the clarity of this? Any doubt? In the given case, any doubt? In the given case, any doubt?
Clear, sir.
Very good, very good. Further, my dear. A case where bankers are giving or providing freely, not charging GST on the services provided by them through credit card, the debit card, RuPay payment, Bheem, UPI. These are all the services providing by banks. For that services providing by the bank, they are not charging any charges also. Reason? To encourage the cashless transactions, to encourage the online transactions. The bank says, if I provide freely such a services, I will get a loss. Then the Ministry of Electronics and Information Technology, MIT, says, you don't worry bank, you don't worry banks, how much charges you will charge? Sir, per transaction I will charge rupees 5 rupees, 10 rupees. That and all I will pay to you as a subsidy. That means State Bank, for example, received a subsidy from the Ministry of Electronics and Information Technology, subsidy, and they are giving services of the Bheem or UPI app or the RuPay payment freely providing to the customers. In that case, such a subsidy received from the government is taxable in the hands of the SBI? No, said by CBIC in by circular. No GST on incentive paid by Ministry of Electronics and Information Technology to acquiring banks. Further, my dear friends, a insurance company generally offering the no claim bonus. You are aware of that. If the particular person not claimed any compensation for the past 3 years, 4 years, and as incentive, the insurance company is offering no claim bonus, saying that, hey, Mr. Insurance, your insurance company, you are going to pay premium now 1 lakh rupee. So you have the no claim bonus rupees 10,000. You pay balance rupees 90,000. Like that only collected by the insurance company. In that case, what is the value of supply? 1 lakh premium amount, or after deducting the no claim bonus of rupees 10,000, the balance at 90,000 in the given example is the value of supply. The clarification given by CBSE, no claim bonus is allowed as a discount. Therefore, the value of supply in the hands of the insurance company is, in a given example, after no claim bonus. That is premium before no claim bonus 1 lakh. Deduct no claim bonus 10,000 as a discount. Balance net premium 90,000 after given discount. Then what is the value of supply in the hands of insurance company? Rupees 90,000. No claim bonus will be allowed as a discount. Clarification given by CBSE. Further, very interesting point here. What about this? Tax liability of wreck and salvage values in motor insurance claims. How to understand this? Sir, in the given case, generally, you come across, my dear friends, in the given case and all, if you refer here, look here. A new car I purchased and I cover the insurance. One fine day, met with the accident. We are all safe, but car is badly damaged. There are two types of insurance coverages. In the one case is here, one case, if the insurance company deduct the salvage value from the claim amount, the salvage remains with the insured due to deductions in claim settlement. That means to say that now car damage, let us say, taken place, my insurance company says, hey Mr. Insured, we will pay the compensation. This damaged vehicle salvage value, let us say 4 lakhs. Compensation is going to be given by the insurance company 10 lakhs. 10 lakhs minus salvage value rupees 4 lakhs, balance 6 lakhs only compensation given by insurance company to insured person. In that case, this vehicle remains with the owner of the vehicle. Then no GST liability. No GST liability. No GST liability for insurance companies where if the insurance company deduct the salvage value from the claim amount, 10 lakhs claim amount less 4 lakhs salvage value of the vehicle, balance 6 lakhs. In that case, there is no supply of salvage by the insurance company and hence no GST liability on the insurance company for the salvage value because the ownership of the vehicle remains with the owner. Is it clear? On the other hand, if insurance company taken over the entire damaged vehicle and given the compensation, 10 lakhs claim, 10 lakhs compensation given by insurance company to the insured person and taken over the damaged vehicle. And the damaged vehicle, the insurance company tomorrow, day after tomorrow, going to sell at rupees 4 lakhs. In that case, when they're going to sell that salvage, the particular damaged vehicle by insurance company is a supply of goods, liable to pay GST. So GST liability for insurance companies when if insurance company settle the claim for the full insured declared value without deducting the salvage value. The salvage becomes the property of the insurance company. In such case, the insurance company is liable to discharge the GST liability on the disposal or sale of the salvaged vehicle. That means damaged vehicle taken over by the insurance company, subsequently selling in the market, that time liable to pay GST. Is the way in which clarification given by the CBIC in the recent past with regard to the damaged or salvage value of vehicles. Yes, so with this, the explanation to our valuation is completed, my dear friends. With regard to the valuation rules is a subsequent session. Valuation rules is in the syllabus of CA final, CMA final, and also CMA inter, but valuation rules are not there for CA inter. Thank you, my dear friends.